Good weekend, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, and this is for Sunday, and we're at the 28th of December, 2025. Please remember this will be another holiday-shortened week, so trade volumes will not be what you think they would be. It'll be a little pickup from, obviously, what we saw on Wednesday, but just expect what I'm saying there to be light volume trade, and you get crazy moves sometimes because of that. We will get some economic data. We're going to get the National Association of Realtors pending home sales at 9. At 9:30, the Dallas Federal Reserve Bank will update their monthly regional manufacturing outlook. And in a delay, we'll get the EI weekly gas storage report on Monday at 9:30. It normally comes out on Thursday, but with Christmas, that didn't occur. So in this report, what we try to do is review weekly charts and come up with some ideas that they may be offering. Obviously, the biggest thing on everybody's mind is the Santa Claus rally. And so far, the rally is progressing. It's the best that can be said. Will the market make new all-time highs? Don't know. We've seen new all-time highs in other markets. If you look at gold, silver, platinum, you're certainly on fire in a number of these markets. Copper, miners getting dragged along as copper soars to the upside with everything else. But I want this week to start looking now at emerging markets. They've had a nice run from this low that was made on the week. And remember, we're looking right now at weekly charts. So this was made on the week of April 11th. The rally peaked out on October 31st, Halloween, and it has been going sideways. Is the market ready to add another leg is really the big question of the day. When we take a look at the swing line, the pattern has been one of lower highs, that's the most recent high, and certainly lower lows along the way. Now this low was 52.38 and this one's 52.58. The pattern will change if this week you take out 55.24. What would then happen is you'd have higher lows, higher highs, and be back into an uptrend pattern. I'm mentioning this and brought it up because the market has fallen back to what I call the line in the sand, the 18-week moving average of closes, which when you get corrections is often a number the market goes to try to decide what to do next. And that's the big question for the market. For the time being, the swing line is down with the lower highs, but the bias is up. As I measure bias up or down in the last price to where the 18-week average is. If the market is over that 18-week average, the market has an upside bias. Bollinger Bands could be an objective if the market takes off to 56.58. And if it were to break down again under 52.58, maybe the 50.47 or wherever that lower band comes in could be an objective. You've worked off the market from being overbought. In addition, you had a bullish embedded reading that was lost, regained, and then lost again. And finally, the market's gone down to its objective, the 18-week average last week, and it has now popped higher. So to me, this market is one that bears immediate watching. In the gap, no surprise here. I started covering it, expecting that the Bollinger Bands would throw the market back a bit, and that's what you're getting. Now, we're going to get, obviously, soon the retail sales numbers and how all these stores did and the returns and so on. So it's something to keep your eye on. We have higher highs, higher lows. You're certainly in an uptrend with a weekly embedded reading. Market's still bullish. Lululemon. We have a market here that if we look at the prior break low is 160.46 and then 160.97. So another turnaround market that went to the upper Bollinger Band in an overbought condition. Any reading in the slow stochastics, in my opinion, over 70 is overbought, unless it embeds with both numbers going sideways over 80, which it hasn't done. And on corrections, 179.87 could be an interesting number. You've had a couple of weeks now, 3, 4 weeks. How many weeks? Take a look at it. It began right here where the Bollinger Band got over. The market price got over the Bollinger Band. You've had 5 weeks in a row up. It's time for a possible pullback, but that doesn't mean you won't get a weekly embedded reading here in Rivian. Rivian's been on a tear to the upside. We're now about 6 months away from the release of their new cars. They're opening dealerships, many of them now, and that is good for servicing and getting their product out there. And they intend on having a $45,000 vehicle to compete with some of Tesla's markets. In Rocket, higher lows, higher highs. The market has come alive. I know people didn't believe me when I started following it, which was back here. And I said, I think we have to watch it because you're probably going to get a correction. And then I think we have to take a look. This could be the turnaround. And the trend is up. I think the pros are buying the market on pullbacks to 1841. I think they'll bail if the market gets under 1776, and they'll look to see, can they get back to the Bollinger Band, and can it do anything more than that? Home Depot still not looking good. Oversold market, not getting any love, as you can see. Just not the place to be. Uber Technology still getting beaten up. Lower highs, lower lows. You did get last week and challenged the 100-day average and got today, this week, back over the Bollinger Band bottom. But that's about it. You can't say any more than that. Federal Express in a turnaround mode. A lot of people wondered what they were doing a year and a half, 2 years ago when they stopped carrying certain freight items and so on. And now they're back with their mojo, and the market is coming up to possibly challenge the high back here of 2024, July 2024. Way up here. So that's about a year and a half ago, and you could easily do that. When we look at XLI, the State Street industrial sector, also coming to life, but too overbought to want to do anything. When you're overbought like this into the Bollinger Band, typically it will take another 3 weeks to make this embed. I don't think that's the place to be. In XLE, and that's if it embeds. In XLE, you have a higher high and a lower low. In UUP, just a crack in the dollar. I mean, you can see that. And the market might be going a lot lower than this. It's under the Bollinger Band, not the spot that I would teach and do teach to go short. I say, no, you don't do that under Bollinger Bands. And there's a gap in here that might have to be filled before everything runs out of time between right here, the low of this week, 27.81, to the high of the current week of 27.04. So an 80-cent gap could happen at any time. In the Spider Gold shares, this is GLD. I made a mistake here, and I have now fixed it for you. So this is GLD. You're up to the upper Bollinger Band. You've been on a ramp to the upside. This market's just had like a jet engine. It's taken off. It needs another week to embed, which it'll probably get. Doesn't have to go higher to do that either. So we'll see what it does. But buying into a Bollinger Band in an overbought market off a weekly chart, no. Copper market, embedded reading, but over the upper Bollinger Band. Doesn't mean it can't run against it, but staying over it, not likely. I'm sorry, one chart too many there. So as you put this all together, you can see where you're at on this. You might want to take a look at the research that we do in the free offerings by moving your cursor up to the top up here or over here if you're watching us on YouTube. I'm Ira Epstein. Have yourselves a great weekend, and I will catch up with you all in the other videos tonight and, of course, in the Monday morning Market Flash. Take care.